In 2017, the Tax Cut and Jobs Act was passed, becoming one of the biggest tax overhauls in modern American history. One of the most controversial elements of this tax law was that it capped the state and local tax deduction, or SALT, at $10,000. If you're someone with high income paying a ton in state taxes, this ultimately resulted in you paying a lot more in federal income tax. However, if you are a business owner, like a solo member LLC or an S Corp, there's a way that you could work around this and deduct 100% of your state taxes from your tax bill. We're going to break it all down for you. I promise you don't want to miss it. Welcome back, guys. Be sure to hit that like and subscribe button if you like today's episode. And of course, if you need help implementing a creative tax and financial plan, reach out to us at www.modernwealth.com. That's modern spelled with no vowels, wealth.com. So when the Tax Cut and Jobs Act imposed the $10K SALT deduction limit, states with high taxes like California were rightfully really pissed off. So as a response to this, and ultimately a workaround, the pass-through entity tax election was created, or PTET. PTET is an elective tax that business owners pay at the entity level. So instead of business income passing through to your individual return, like it usually does, you would pay a separate state tax on your business income. This pass-through entity tax, or PTET, is 100% deductible at the federal level, and you generally receive a dollar-for-dollar credit on your personal state tax return. So for example, if you elect PTET and the tax is $20,000, that amount is fully deductible on your federal tax return because it's considered a business expense. It is not capped at $10,000, and you can still take the standard deduction. This $20,000 PTET then generally reduces any state tax that you owe. So for example, let's say that your state tax liability is $20,000. It would be eliminated since you already paid $20,000 through PTET. So guys, I get that this is a complex topic, no doubt about it. So let's look at an example of PTET in action. So what you're looking at is a solo business owner in California who files a joint return, and they have $900,000 in net income. Now, based on California state tax rates, their state tax bill alone is $78,432. Now keep in mind, they can only use $10,000 of that $78K as an itemized deduction. So because they are going to take the standard deduction, they're not going to itemize. In this case, they end up paying $248,332 in federal taxes alone, plus the $78K in state taxes. So we're looking at a total tax bill of $326,754. Again, I want to state that number again, $326,754 in total taxes. So a couple things with PTET before we break down how this is actually going to save us tax. Number one, not all states even offer a PTET election. If you live in a state that doesn't offer one, you're kind of screwed and you're stuck deducting only $10,000 of your state and local taxes. Second thing to keep in mind is that the pass-through entity tax is going to have its own tax rate, and it's not always going to be the same as the state tax rate. So for example, in Arizona, PTET has a tax rate of 2.5%, which is the same as the state income tax rate. But in California, it's a flat 9.3%. A flat 9.3% in state taxes is likely going to mean you will pay more in state taxes to make this election in California. However, the tax savings you get on the federal level actually could make up for this fact, and you could actually save a lot more in total taxes. Finally, PTET can be a pain in the butt to set up. You usually have to follow your state's protocols to ensure that the election is made on time. And then in order to deduct it on your current year tax bill, you need to make sure that that tax is paid during the tax year. You can't just wait until tax filing to pay the tax. Otherwise, it's not going to be considered a business expense that you could deduct from your federal tax, which is the whole reason why we're doing this. Now, I get it, guys. PTET, it sounds complicated, and this episode is really just scratching the surface. But if you are a business owner, even if you aren't making a crazy amount of money, making this election could actually save you quite a bit in taxes. So let's go ahead and break down how it would save us tax. On the right side, you're now going to see the exact same scenario we broke down earlier, but this time we're going to make the PTET election. So a couple things I want to highlight here. Notice we're going to pay more in state taxes, and that is because California, the state that this individual lives in, has a PTET rate of 9.3%. So the state tax bill ends up being $83,700 instead of $78,432. So on the surface, it doesn't seem like a good deal, but when you start to peel back the onion, you're going to see that this actually results in some serious tax savings. The reason for this is we get to use the standard deduction of $29,200, and we get to deduct the full $83,700 as a tax deduction for our business, which ultimately reduces our federal tax bill to $217,352. So even though we paid a little more in state taxes, the federal tax savings more than make up for that. The net result is that we saved a total of $25,702 in taxes. That is some serious tax savings for someone making this type of money, and we haven't even explored the possibility of doing a solo 401k, defined benefit plan, playing around with their entity structure, etc. Once we start adding those elements, we could potentially save even more. Again, if you are a business owner, it's an absolute must that you at least explore PTET. It's not going to make sense for everyone, but you need to at least do your due diligence on it to see if it makes sense for you. Again, this episode is just scratching the surface. I know that this is a super complicated topic, and this episode is just meant to be a primer for this strategy. So again, don't forget to like and subscribe to today's content. And of course, if you need help with your own financial plan, reach out to us at www.modernwealth.com. That's modern, spelled with no vowels, wealth.com. I'll see you next time.